Welcome to a special edition of This Week on Wall Street. You may have heard that over the weekend, Warren Buffett announced he would step down as CEO from Berkshire Hathaway. Now, Warren Buffett is everybody's favorite investor. He's earned the respect of everyone in business, not just because of his investment returns, but because of his clear thinking, his generosity with his ideas, and his wisdom. So this is a big story for all investors, and particularly for shareholders of Berkshire Hathaway. That's why we had to speak to Whitney Tilson today. Whitney is the editor of our flagship newsletter, Stansberry's Investment Advisory. He's a former hedge fund manager and our resident Buffettologist, having studied Buffett for decades. Now, Whitney found Buffett after his college roommate, Bill Ackman, laid out a curriculum for him that simply said, read everything Warren Buffett has ever written, and you can stop there. Whitney helped compile the original Poor Charlie's Almanack, the collected speeches of Buffett's partner, Charlie Munger, and he's been to the last 26 Berkshire annual meetings, but happened to miss this one for the first time in all those years. And Whitney knows Warren Buffett personally, even calling him a friend and mentor. So, Whitney, thanks for joining us. I want to start there. How did you get to know Warren Buffett?
Well, I think the first time I actually met him in person and shook his hand was out at the Omaha Country Club at a dinner the Friday night before the annual meeting. This would have been back in the late 1990s. I'm going to guess, 97 or 98. I've met him a dozen times over the years, spoken on the phone with him many times as well. And the main way I communicate with him, even though he doesn't have email, is I sent him, I'd say, for the past 25 years or so, I'd say once every couple of weeks on average, I send him an article, something I come across that I think would be of interest to him. And I send it to his secretary and she prints it out for him. So, we've kept in touch over the years.
Wow, that's pretty. That sounds pretty incredible. I know he's been there for you at some important times in your career. But for sort of the new investor or the uninitiated, what is so special about Warren Buffett? Obviously, he's considered one of the greatest investors of all time, and the returns speak for themselves. But as a thinker and an educator, why should investors really take the time to study Warren Buffett?
Well, I started studying him because I was fascinated with investing, wanted to become a better investor. And it would be as if, Ted Williams, the last man to hit 400 at baseball, were conducting a hitting clinic out in Omaha once a year for free. I'd go out there and learn from him. And so it started there, wanting to learn the secrets to become a successful investor just like him. But as I started going out and listening to him and his now deceased sidekick, Charlie Munger, over the years, Munger passed away in November of 2023, I realized that they were imparting what Munger called worldly wisdom about how to live your life with integrity, how to treat other people, how to be a good husband and father and friend, how to develop good habits and just generally be successful in life. And that really probably had an even greater impact on me than the investing stuff over the years.
Yeah, I've always said that becoming a good investor really at its core is becoming a good decision maker. And I can see that in a lot of your work where you can take some of this, the application of using, evidence and being thoughtful and use it in all aspects of your life. But now Buffett's 94, and at the end of the annual meeting on Saturday, he announced he plans to step down as CEO at the end of the year and to recommend to the board that Greg Abel take his place. Were you surprised that Buffett chose 2025 as the time to step down?
Hindsight's always 2020. It seems obvious a few days later, that he might announce this at this annual meeting. He's been hinting at it for years. He's long ago anointed Abel as his successor. Buffett is still mentally sharp as a tack, but physically it's clear that he's slowed down a lot, using a cane, sometimes gets around in a wheelchair. 94 years old, father time is catching up with him physically, though again, mentally sharp as a tack all day yesterday. So not surprising. And though the way he did it, pulling a surprise with Abel there on stage with him and announcing it, he had only told his son and his daughter, I believe, ahead of time. So he had a little fun with it, and shareholders were initially in shock. It was right at the end and they were not expecting it. But as they realized the implications of what he was announcing, there was just a roar in the crowd and stood up and tears in people's eyes. This was Buffett's 60th annual meeting of Berkshire Hathaway. And, over that time period, and not even counting this year's outperformance, he generated a total return of 5.5 million% over those 60 years, 61 years technically, and versus 39,000%. A pretty darn good return for the S&P 500. It's what's interesting is the Buffett isn't going anywhere. He's leaving plenty of time here. He's going to remain the CEO for another 8 months almost. And then he's not going away. He's remaining chairman of the board. He's still going to be a sounding board for Abel, Ajit Jain, and the board of directors of Berkshire.
So you think it was mostly a personal decision? You don't think there was any strategic, maybe this pile of cash is just getting too big, or maybe he doesn't like, the economic conditions? You think it was mostly just time?
Yeah, I think he's very, very rational. Doesn't want there to be any sudden shock of him dying in office, and I think maybe he saw how quickly Charlie Munger went from preparing for his 100th birthday a month out to just within a matter of days he passed. And he has commented, I think he commented during the meeting, he said, once you get to be in your 90s, your odds of living one more year drop dramatically. Anything can happen. It can happen very quickly. So he wanted to make sure that there would be, a smooth transition. And I expect Buffett, Munger's 7 years older than Buffett. So, that would, if Buffett lives as long as Munger, that's another 5 years. But I also do feel like it is such a big job being the CEO and having all that responsibility of one of the largest companies in the world. So it may have just been exhaustion, but I don't think it had anything to do with Berkshire's pile of cash or market conditions.
Okay, well let's turn to the company a little bit. Greg Abel comes from an energy background, and he's been at Berkshire for almost 20 years, and his current title is Vice Chairman of Non-Insurance Operations. Buffett said that Abel will succeed him for a few years now, like you said, but also in the mix was Ajit Jain, the Vice Chairman of Insurance Operations. So what does Greg Abel mean for Berkshire? Should we expect a big change in the direction of the company, or do you think he's going to continue business as usual?
I think it'll largely be business as usual. Berkshire is still going to be run as sort of a team approach right now. Abel is the CEO, and everyone else will report to him. So there's no co-CEO with Ajit Jain, but Ajit Jain is going to continue to largely run the insurance operations, but reporting to Abel. And then you have Ted Wexler and Todd Combs, the stock pickers Buffett and Munger brought in, who have done a decent job, haven't really knocked the ball out of the park, but I expect they will continue to work on some deals. Todd Combs is chairman of Geico, which is really doing well. Berkshire's a big auto insurer. So there's a great senior management team. I do expect Greg Abel to be, he's more of a traditional managerial type. And he will probably try and manage some of the businesses a little more. And I think that'll be a good thing. For example, one of Berkshire's largest businesses, North America's largest railroad, Burlington Northern Santa Fe, is the only major railroad that hasn't adopted so-called precision railroading, running it more of a just-in-time basis with fewer capital assets. That's really been a tailwind for many of the other railroads. And so wouldn't surprise me to see him, get a little bit more hands-on there.
Yeah. So I think that Todd and Ted have done a great job, but they'll really prove themselves when we see a downturn in the market. I think they found, there's not a lot of things to buy these days, and we'll see if they have that sort of Buffett magic when things get rocky. But it's really up to them to deploy this balance sheet, you think, on stocks, or are we going to watch for Greg to acquire more companies, as a whole?
I think it will be more toward acquiring entire businesses. Buffett has expressed a preference for that. look, he continues to buy Occidental Petroleum. He bought Chevron. The big home run over the past decade has been Apple, that he's actually been trimming substantially. But clearly, for tax reasons, for control reasons, buying wholly owned businesses the first preference. And I think Greg Abel is more of a managerial guy, not a stock picker. He has no background as a stock picker. And so that will naturally be in his sweet spot as well.
Okay, so looking at Ajit Jain as the insurance guy and Abel as the non-insurance guy, some people say that the capital-intensive energy companies and the railroads and things like that have been a drag on Berkshire's returns, and they think it should return more to focus on the insurance side. So in your opinion, what do you think about those arguments, and would you have gone with Ajit Jain if you were making this call?
No, I would not have gone with Ajit to be CEO, if that's what you're asking. He is not really a managerial type. He's more an analytical risk assessor type. And so I don't think he would want the job and wouldn't be suited for the job. I think he's perfectly suited to just leave him exactly where he is. I think he and Buffett have historically talked almost every day, talking about writing these super catastrophe insurance, these unusual policies that Berkshire specializes in. And I suspect that will continue until the day Warren Buffett isn't with us, and that's fine. That goes on. Greg Abel isn't part of those conversations, nor would he want to be, or does he add value there? So it's sort of interesting. I'm trying to think of the analogy. Like Buffett is now shifting into like a Munger-like role, the way Munger was a sounding board for Greg Abel. I'm sorry, Munger was the sounding board for Buffett for decades. I think Buffett will now play that role for Greg Abel, and will give Greg Abel the autonomy to really run the business and make the final decisions. And then I think Ajit Jain will continue to be the Munger to Buffett as far as the insurance operations go.
Yes, life goes on, I suppose. Okay, so no one can really replace Buffett. I think Greg Abel will even tell you that. But we've seen a lot of companies who seem to have irreplaceable CEOs continue to do well after they leave, right? Apple's done well after Steve Jobs, Microsoft after Bill Gates, Amazon's still doing well after Jeff Bezos. And like those last two, like you said, Buffett's still around and will be active in some form of the company. So I think the reason these companies continue to work is because they have a culture that outlasts the founders. And do you think there's enough of a culture ingrained at Berkshire Hathaway that it continue to outperform?
Yes. I don't think the culture is going to change. I don't think Berkshire is going to be broken up. I don't think it's going to start paying a dividend. Probably not. If you given where the share price is, it's pretty fully valued, maybe even slightly overvalued here. We can talk about that in a minute. And Buffett has a board of directors, but Buffett is remaining the chairman. So obviously nothing's going to change while he's the chairman. When he passes, his son Howie will become the chairman to ensure the culture. And the board and Greg Abel and Ajit Jain and all the people aren't going to change. So Berkshire is, I think it's going to be steady as she goes. And that's why I'm a little surprised the stock has sort of sold off initially, as it started trading after this announcement.
Yeah, I was just going to bring that up. I want to talk about kind of the immediate implications of this. Today, we're recording this in the morning. Berkshire is down about 5%. Who knows how long that'll last? It could be up by the end of the day. But just the initial reaction here, is this a case where you keep holding? Do you want to lighten up your position? Is this a buying opportunity in the short term? Do you have any thoughts about? We don't really have history for when the greatest investor of all time steps down from his company. What would you think is going to happen in the next few days?
I actually expected the stock to be down maybe 1% on this news, so I'm a little surprised it's down more than 5% initially here. Berkshire Hathaway's intrinsic value hasn't changed one iota, of course. Buffett isn't even leaving till the end of the year. And I still think his life expectancy is, a few years from now anyway. And he's still going to be chairman. So absolutely nothing's going to change. So, why is the stock down? I think it's sort of more emotional, number one. And two, people, there was sort of some built-in Buffett halo aura that people may feel is gone, but again, it's not gone. It's still there. Buffett, to the extent there's a financial crisis and there needs to be a bailout, and companies are willing to give Berkshire better terms for the Buffett halo, that's still there, as long as Buffett is still there. So there is another aspect of when Buffett is no longer there. Will the CEOs of all the operating businesses still tap dance to work today to work for their CEO, Greg Abel, as opposed to working and reporting to the legendary Warren Buffett? So you could have some more turmoil there. If Abel tries to manage the businesses a little more than Buffett did, you might get some of these very independent, often business founders, might have a negative reaction to that. So, things, that Buffett is irreplaceable, no question. I'm just surprised that the stock is reacting today as opposed, to this, when Buffett isn't going anywhere as CEO for 8 months and probably isn't going anywhere in terms of his role at the company and the value he adds, for a number of years.
Yeah, and we're already starting to come off those lows a bit. And what you said about the companies and how they manage themselves really goes back, I think, to that culture question. Berkshire has 390,000 employees, but only 27 of them are in the home office because he's all long let the companies run themselves. That's why he bought them. And so you really only have to have that culture in that small group. And I would think that Warren Buffett is thoughtful enough about Greg's Abel's character and how he's going to work that he's going to continue doing the same thing. I'd be very surprised if all of a sudden he decides he's the king of Berkshire and wants to start micromanaging everybody. It would be really shocking if Buffett put someone in place who was going to make that kind of turn.
Yeah, I think Munger said years ago, he said, all these years, Warren Buffett has proven himself to have such good judgment about people and about business, and then you think the final most important decision he makes in his career he's going to screw up. That doesn't make a lot of sense.
Yes.
I also think part of the reason the stock is selling off is it's up, off the top of my head, I think it's up 15% this year. Market's down 3%, and according to my calculations of intrinsic value, the stock had gotten to as much as about 10% overvalued. I use a pretty conservative estimate of just cash and stocks, part of the insurance earnings, and then I put a multiple on the earnings of the operating businesses, and sort of came out to $740,000 a share roughly. That number fluctuates by the day depending on the stock holdings. The stock got as high as $812,000 per A share, divide by 1,500 for the B shares, that had gotten up to $542 a share at their peak. This morning down 5% at $764 and at $510. I think, the stock is now back to, a lot closer to intrinsic value. So I think it just sort of got ahead of itself because investors in a time of market turmoil fled to the safety of Berkshire Hathaway, but it bumped the stock up above any change in intrinsic value. In the first quarter, I would say Berkshire Hathaway's intrinsic value was flat relative to the end of the year, yet the stock was up 15%. So, that pushed it from being maybe 5% undervalued to 10% overvalued. So we're seeing a little bit of pullback just based on valuation.
Yeah, and it's already starting to come up a bit this morning. That was going to be my next question for you. You do maintain this very specific model of the intrinsic value of Berkshire Hathaway. I think when you saw it was about 14% undervalued last year, we added it to Stansberry Investment Advisory, and it's up about 47% from there. But you would say today it's a little, so this is all sort of not talking about Buffett's exit, but you would say it's a little expensive, maybe even after this little bit of a decline. You think it's
I wouldn't say expensive. I mean, plus or minus, 5% is just a comfortable hold on Berkshire. It means it might, Berkshire's been tracking the S&P 500 for, the better part of probably 15 years now. There have been periods of time where I sort of traded down to 15 to 20% below intrinsic value. And that's a time to buy it. And the rest of the time you pretty much hold it. I've never really been inclined to sell. It very rarely has traded even slightly above intrinsic value. But there, you should think of Berkshire not as a cash substitute, even though it holds $348 billion worth of cash, keeps piling up, but rather as an S&P 500 substitute. Well diversified, mostly U.S. focused. But I think it's safer, has more optionality with all that cash that they can put to work.
Yeah, no, I agree. Sometimes when you think about the S&P 500 and you think about investing, you go, well, what if you took those and you just owned like the good companies in that? And it turns out to be harder than it sounds, but that's kind of what you're getting when you buy Berkshire Hathaway. You're owning just the good companies out of the biggest ones that sort of keep this country moving. Onto that cash pile. Like, what do you think is next? You said you don't think there's a dividend coming. I think Buffett is leaning off buybacks for a bit because of the new taxes. Stocks are not cheap. They've got over 300 billion on the books, and they make another 30 billion each year in free cash flow. What are they going to do with this? What's your prediction?
It depends on what the market does. It's Buffett and his team, now Abel, they're bargain hunters, and they're not finding great bargains. Buffett did hint at the annual meeting. He said we came close to putting $10 billion to work recently. I'd be curious. I'd be curious to know, why they didn't pull the trigger on it. My guess is obviously that would have been an acquisition. He wouldn't have couched it that way if it was just like, I thought about buying a stock and didn't buy it, because he could have put that to work in no time. So there must have been some negotiation that fell through. So they're definitely interested, and interested in putting that money to work. But Buffett said at the annual meeting, no rush. In fact, the big cash hoard is one of the reasons the stock's been done so well this year during a time of turmoil. So there, a real correction in the market, a lot of turmoil out there, would be good for Berkshire, even though in the short term the stock probably would go down.
Okay. All right. So last question for people out there who may be new to Buffett, they haven't been following like you have. What's the best way for them to understand who he is and why he's so important, what they can learn from him? Is there something you can point them to start their adventure?
Yeah. Well, just to get to know Berkshire, you can just go to berkshirehathaway.com and you can read the annual letters going back decades. There's the definitive book about the man was written a number of years ago by Alice Schroeder called Snowball. And if you really want to study him and go back, I'm the one who compiled all his Buffett partnership letters back starting in the late 1950s. So if you just Google Buffett partnership letters, a PDF will come up that I compiled probably 15, 20 years ago almost. That's really a fascinating look into a younger Buffett. And I'm very hopeful, by the way. Come out to the Omaha meeting next year. I plan to be there. And I'm assuming Buffett is sort of the ringleader, and Greg Abel and Ajit Jain were on stage with him this year. I'm assuming the same three men will be on stage next year if Buffett's still able, but the first person answering the questions will probably shift toward Abel, but I think a lot of people will steer the questions to Buffett anyway. So come out to Omaha and experience the cult of Buffett and Berkshire.
Yeah, those letters from Berkshire's partnership, Buffett's partnership before it was Berkshire, they were lost to history until you found them in someone's basement and got them on the internet. So value investors have long been appreciative of that, Whitney. So yeah, folks, it's the end of era in American business, and that is for sure. Buffett's certainly been thinking about this for a long time, and he's been working to build something that will continue to grow whenever he eventually stepped down. Now, of course, we'll be watching things to see how this all develops for the future of Berkshire. You can keep up with our work and hear more from Whitney by signing up for free at stansberrydigest.com. Thank you for joining us today, Whitney, and thank you for all of those at home.
Thank you.